It's kallison@cdcfcu.com. I will send you the recording, and you will also get, obviously, it will be coming from my email address. So you can always reply back if you have additional topics you would like to see or questions. So we will get started. During today's workshop, we will cover 5 steps to consider when facing a financial transition. Transitions in life that impact our finances are going to happen, whether they are foreseen or unexpected, and can be challenging for anyone. We'll discuss the types of transitions you can prepare for, how to manage a transition, communicating through the process, managing debt, and accessing resources. At the end, we will have some time to answer questions, so pop them in the chat as they come up. Let me make sure that no one's telling me they can't hear me anymore. The background noise. Oh dear. Okay. Now I'm echoing. All right. Don't know. I don't know if I have anything I can do about it, if I can change it. Someone sounded good. They can hear fine. Okay. I'm going to move forward, and then hopefully if you are having some issues, then hopefully when you can get the recording and it will be better. So I apologize. There's sometimes computers don't always do what we hope. Okay, so next slide. Let's see. There are many transitions in life that we want to celebrate. However, how we manage the transition once the celebration is done may have a financial impact on our future. That impact may be negative or positive. So let's discuss several transitions you may experience in your life that can be prepared for in advance and review the various steps to take or do. Understanding these can help you make informed decisions and be better prepared for the future by setting yourself up for financial success during the next stage. Okay, some people say it sounds great now. Okay, I'm going to continue. All right, so let's start with high school graduation. So most likely I'm talking to the parents of high school graduates, but let's discuss anyway, so maybe you can understand what they are thinking and what's going through their mind. They have a lot of big decisions ahead of them. And one of the first is just, what am I going to do next? Most kids aren't thinking about their financial situation as they near high school graduation. They may have thoughts about their plans to either get a job or go to college, but they probably haven't thought about how they will pay for all the things that they need, even beyond, if they're going to college, even beyond all of that. It includes housing and food and books. Without a plan, they may commit to things that they can't afford or take on debt they can't manage. As we continue our conversation, many of the items we discuss to prepare for a transition will apply to them. If you decide college, or if they decide college was the right path, and they just graduated, you will have many financial decisions to consider with them. They will likely be looking to secure a full-time job, although you will hopefully be making more money. They will hopefully be making more money, or likely going to also have more expenses in this stage of their life. If this new job will take them to a new city, they will want to consider the cost of living in relation to their income. They may be managing the cost of rent, utilities, food from income, doing that by themselves without your assistance. Also, they will need to understand how they will manage their student loans, or you might be managing your student loans. I know I have a variety of people that join me for these webinars. So your student loans will expect payments to begin within 6 months of leaving school. Or you will need to communicate with the servicer about your situation to explore options if you can't afford the normal monthly payment. If you are considering expanding your family, so we're going to move on to other transitions. If you're considering expanding your family, having a baby, it is important to prepare for the added expenses and how you will work them into your budget. The North Atlanta Star reports it will cost about $19,000 per year to raise a child in the state of Georgia. $19,000. So, however, depending on where you live, this number can increase significantly. So, if you choose to move to a different state or something, it might go up from there. When planning to expand your family, you will want to consider many things, including additional medical costs, food, potentially, formula, clothing, diapers, childcare. According to Childcare Peak, the current cost of childcare in Atlanta averages about $9,650 a year for school-age home-based care and $12,240 for infant center-based care. Huge expenses. So if you are considering, let's say now we'll move into a job change or starting a business, it is also essential to understand how that might impact your cash flow and personal finances. Many of you may be considering starting over at a new company, or so you'll want to understand weigh the differences in benefits in addition to the salary. If becoming a business owner is a goal, do you do the research, make sure that you investigate all the possibilities and connect with the U.S. Small Business Administration for information to assist you on your journey. One of the most significant transitions you will experience in planning for retirement. We all have different ideas of when we might plan to retire or what type of retirement we plan to have. So it is never too early to start planning. I was at the garden market today and I had several people come up and they were very young and they asked me about, planning for retirement. So it is something you want to start immediately as soon as you take your job so that you are set and you're not worried about it, a year before or 2 years before. So sign up to receive your annual Social Security statement to estimate the amount you expect to receive upon retiring. You will get this statement once a year. Keep in mind that currently you can start to draw Social Security as early as 62, but you will receive a smaller amount than if you wait to full retirement age. If you were born in 1960 or later, your full retirement age is 67. You can also choose to work beyond full retirement age, which will provide more Social Security benefits later. Consider carefully how much your monthly benefit may change based on your age. Your Social Security and the amount you have been able to save will also determine the type of retirement you can plan for. We do have a financial advisor on staff. His name is Henry Chenault, and he is familiar with your TSP. Your first consultation is complimentary, so feel free to schedule an appointment with him. If you have a 401k, a 403b, a 457b, or a TSP, which I know most of you will have the TSP, but I do have contractors on here, and sometimes I have other family members, so we could have a lot of different people on here. We have a 401k, so I will speak to all of those. It is an ideal way to set money aside for your retirement every time you get paid. So regardless of which product, investment vehicle you have, the TSP, the 401k, or other, every single paycheck, it is a good idea to take money from that paycheck and put it in your retirement. If your employer provides a matching program, you will want to try and take advantage of any retirement benefit match your employer offers. A match is a percentage of your own contribution up to a limit the employer sets. So, for example, they may match up to 3%. So the minimum you would want to invest is 3% of your income. This is money that is considered part of your compensation package. So not taking advantage of it is leaving money on the table. We highly recommend maximizing an employer match if offered. Several months before retirement, we encourage you to create a retirement budget and follow it to ensure you can make your expenses with your new income. This will help you identify expenses you may have forgotten or look for areas you can adjust if needed. As you transition into retirement, it's important to anticipate potential changes in your lifestyle and health. The first few years of retirement may bring about a list of things you've always wanted to do, and your health may allow you to be more active. However, as we age, our pace tends to slow, and we may have fewer extras to plan for. It's also important to consider the possibility of significant increased medical expenses in the future. Consider preparing for this in advance by building up your health savings account if you have one. Your budget should consider the entire time you won't be working and the changes that come with it. Okay, so now we move on to the transitions we weren't planning for, such as divorce. Divorce will disrupt nearly every aspect of your life, including your finances. Although this is a very difficult time to navigate and not something you can always prepare for, you will want to take some necessary steps once you determine this is the path you will be going down. If you are going through a divorce, you should seek legal advice and ask about your finances and what you are and are not allowed to do until the divorce is finalized. Having a professional guide you on the process and steps that need to be taken can be essential to your financial health. One step you will want to take is reviewing all three of your credit reports to understand which obligations are joint, individual, or authorized user. So for your free financial or your free credit report, you're going to go to annualcreditreport.com. I'll say that again, annualcreditreport.com. That is where you get your free credit report from all three credit bureaus, and you can investigate. You have to get all three because not everyone uses the same, or not everyone reports to the same bureau. So make sure you get all three and look and see, what do you owe? What do you owe individually? What do you have jointly? It's very important to know that before and, well, during divorce. Confirm with an attorney if it's okay to remove your name from any accounts you are only authorized on. Discuss closing any accounts you are joint on to avoid additional charges from being added. You may want to add a credit freeze to your credit report if you are concerned your ex may try to use your personal information and apply for new credit. I actually have a freeze on my credit report anyways, so I do it to prevent identity theft. If a credit freeze will restrict access to your credit report. This will keep any creditors from applying for new credit in your name. It also prevents you from applying for new credit. So if you put the freeze on your account and then later you want to apply for an auto loan or a personal loan or home loan, whatever it is, you have to unfreeze that account. Once they run the credit, you can put the freeze back on it. And now, pretty much all of the credit bureaus, so TransUnion, Equifax, and Experian are the credit bureaus. You will find them all three on annualcreditreport.com. But in order to freeze your credit, you have to go to each individual one. And now they all have apps, and it's very easy. It can you toggle on and toggle off. So it's a great new feature that they offer. So it's a lot easier than it used to be when you had to call to do it. Okay, so also if you don't have any credit cards in your own name, so we're still talking about divorce here. So if you don't have any credit cards in your own name, consider opening a new account to establish credit on your own so that it shows up on your credit and establishes your credit score. Make sure you always pay the account on time, and ideally you want to pay it off any charges that you make each month to avoid paying interest. When you lose a loved one, you are already experiencing grief, and now you may need to manage the finances on your own. So this is the second of the unexpected transitions in life. If possible, try to create a plan in advance. This will allow you to focus on yourself or allow your loved ones to focus on themselves during the grieving process. You can start the process by seeking legal advice to create a will or a trust. We have just added a product, well, just added, I guess it was last year, but it's called Trust and Wills. It's under our member benefits tab on our website, cdcfcu.com. And by being a member with the credit union, you get 20% off. So that is a product that you log into, you create, the trust and the will inside of their product, and it's very affordable compared to hiring an attorney. It's easy. You read through it, you click on what you need, what you don't. It's really a great product. So if you don't have anything that's too complex, it might be the right solution for you. Again, cdcfcu.com. Go to the menu bar, resources, and member benefits. The goal is to ensure your assets and possessions end up where you want them to be. If your financial partner has credit union and bank accounts your name isn't attached to, you won't have immediate access to those funds. Ideally, identify a beneficiary on all accounts. So meaning if you pass away and your spouse is not listed on that account, they won't be able to access those funds, which could be very, very important if that's what you're using to pay your mortgage and your electric bills and those types of things. You should also consider designating a power of attorney, a POA. Per the Consumer Financial Protection Bureau, a financial POA can be used as a tool to help plan for the future. including the possibility that you'll be unable to make important financial decisions due to dementia, traumatic brain injury, or another impairment that could affect your mental function. When used for advanced planning, a POA generally is durable, meaning it continues to be effective even if you become incapacitated. Naming a POA is important as you want to ensure they have your best interest in mind and not take advantage of their position. Next, inventory your valuable assets, including any property, vehicles, jewelry, etc. You can then determine how you want to use these assets. For example, if your income has decreased, can you sell them? Can you generate cash flow from them? You will also want to inventory all of your financial assets. This can include checking accounts, savings accounts, life insurance, stocks, bonds, mutual funds, CDs, cash, annuities, gold, on and on. And again, we have a financial advisor that can help with these products or several of these products, insurance, stocks, bonds. So please, if you want to meet with Henra, you can log on to our website and schedule an appointment with him there. So you'll want to make a list of each one of these items, where they are located, the beneficiaries on each account, and the rate of return on the investment, depending on if that's stable. Finally, list all of your debts, including secured debt and any collateral attached to it, as well as unsecured debt like personal loans, credit cards, medical bills. Document who and what you owe, as well as any helpful details like account numbers and other owners. If you or someone in your house becomes disabled and can no longer work, this will likely impact your finances. So you might feel overwhelmed or frightened and not know where to turn. Take time to process what is happening, including anger, grief, other emotions. Once you are ready, you will want to seek legal advice. An attorney may be able to assist you with applying for benefits like Social Security, disability, or workers' compensation benefits. This process can take some time, so starting the process as soon as you are able is advantageous. If you become unemployed, have your hours reduced, or are dealing with a strike or a shutdown or a layoff at work, you will likely see an immediate impact on your finances. Most reductions or losses of income cannot be anticipated ahead of time, but occasionally you may see warning signs that give you time to start taking steps to prepare ahead of time. Let's talk about a government shutdown and why you should join the credit union. So we offer furlough lines of credit to our members who have established direct deposit into their account. The line of credit is for the amount you have coming into your account as your direct deposit. So if it's your full check, then you would get the line of credit for your full check. If it's $50, you would only be able to get the $50. Okay, so that's always a big question. I'm trying to educate you guys before a furlough happens, and then we have everyone rushing the doors trying to get it, but they don't have a credit union account. Has to be set up prior to. Okay, so back to what to do when one of these happens. Start by finding out if you are eligible for unemployment benefits. Determine the process to apply for in your state. How long you will be eligible for the benefits once they are approved, and what the amount is. You will also want to determine any savings you can easily access and consider other assets you have to use to supplement if needed. Next, we will discuss additional steps you should take to manage any transition. As previously mentioned, there are some instances you can prepare for in advance, and some you will need to pivot quickly and figure out how to move forward without notice. The next steps we will discuss will apply to every situation. Understanding your situation and options is important so you can take control and make the choices needed to move forward. First, you'll want to determine if the transition is short-term or long-term. This will be important as you determine and proceed through the next steps. Consider all potential income you can count on. Keep in mind it may take time to be approved for unemployment benefits and for them to start. It may take a lot of time to be approved for disability income and for it to start as well. Are there other income sources in your household? And how much is received each month? Will you receive a severance package? Do you have the ability to work a part-time job or start a side hustle? Keep in mind how this might impact other benefits. Consider your assets and whether they are things you might be willing to use to cover expenses during a longer-term transition. For example, can you sell an extra car or recreational vehicle to reduce expenses and increase cash flow? It's important to note that we strongly discourage withdrawing money from a retirement account unless you are actually in retirement. Doing so could mean losing the benefits of the hard work you have put in to save the money and the potential growth from compounding interest, which can be a significant setback when you begin the retirement transition. If you are considering this, be sure to have an honest conversation with a financial advisor who can help you understand the impact of early withdrawals. So there's an impact, there's a penalty, as well as you will pay taxes. So please reach out to someone. Feel free to schedule that consultation with Henra to discuss those types of things, if that's something that's on your mind. Understanding our debt obligations and determining their priority is necessary when dealing with a transition. Secured debts that have collateral attached, like a mortgage or a car loan, are typically higher priority than unsecured debts, like credit cards, if difficult decisions have to be made. First, pull a copy of your and any financial partner's credit report. We recommend that website, annualcreditreport.com. Just go directly to that website. Don't go to Google and type in free credit report, because you'll get bombarded with websites and they charge. So the only site that I know of that is free is annualcreditreport.com. You can pull the credit report for free from all 3 credit bureaus. Again, TransUnion, Experian, and Equifax. You now have free weekly access to check those credit reports. You will also want to review any statement you received for your debts. Make a list of your creditors, your current balance, minimum payments, and interest rates. You should include All obligations, including mortgages, home equity lines, auto loans, recreational vehicles, personal loans, student loans, credit cards, medical debt, and collection accounts. This information will help you create a budget and determine how to prioritize. If you are attending today, if you are attending today to start preparing for a future transition like retirement or a new baby, this is a perfect time to focus on debt reduction. If you are interested in talking with our nonprofit partner, Green Path Financial Wellness, they can assist you in understanding your options so you can determine the best path to reduce your debt. I will share a slide later on with their contact information, but I just wanted to mention them because they do help. If you know that you have a future transition, that's extremely important to be prepared for. They do help you learn how to manage your debt. Okay, so now that you have determined the financial pieces needed to help you move forward, it is time to prioritize everything. You will want to create an emergency budget and align it with your priorities. The goal is to take everything out of your budget that isn't absolutely needed while you navigate this time of uncertainty. These are decisions you and your household need to make together. A budget should start with all of the necessities first. Look at all of the spending you do for convenience. How many times have you stopped to pick up food because you had a long day, even when you have food at home and you could prepare a meal, from that? How many times have you stopped? Or how many times have you ordered from, had Lyft bring it to you, or DoorDash, or whoever? So we have an e-learning course that will help you through the prioritization of this process. It's called Aligning Priorities. I suggest going through this course, or at least using that handout that I'll email you in the follow-up email when I send you the link to the webinar. And it's called Aligning Priorities. So the handout comes there, or you can go on our website and take the e-learning course. If you want if you want to take the course, you can find it actually at greenpath.com/CDCFCU. I'll see if I can add a link into the email for you guys. Okay, an emergency budget is just that. It is what you absolutely need to support your household through the transition. So again, what are your necessities, not what are your wants? What are your needs? Now that you have your emergency budget, you're tracking your spending, it should be just as important as ensuring that you follow it. So create the budget, but also be on top of it and follow that budget. If you continue to spend money on items outside of your emergency budget, you will likely run short on money to cover a priority expense. Consider what method you will use. You can use, the envelope method system, where you put money in envelopes for each spending category and only spend from that envelope. So once that envelope's empty, there's no more money for eating out, that entertainment, that sort of thing. You could create an Excel spreadsheet to track your spending. There are a lot of templates in Excel you can use. You could keep a journal of your spending, or compare it back to your budget, or to confirm that you're on track. Or you can use a mobile banking app to keep track of your spending. There are many expense manager apps available through the App Store. There's just a numerous amount of them. We have different features that are built into our online banking, so also check into that and utilize those. Those would be free. So just be sure that you research and you find what fits your needs. And as far as the apps, there's plenty that are free, so don't pay for one of those. There's a lot that are free. You should be able to find one to meet your needs. So don't, you don't need to pay in addition for that. Although you are going through a tough time, surround yourself with family, friends, and professionals will give you the support you need to manage any transition. Being able to communicate your feelings, needs, and fears will give you more confidence in how you move forward. If you struggle to make decisions and aren't sure how to prioritize your next steps, communicate that to anyone who will be part of your transition. Involve your household in determining what the needs and wants will be. For instance, if you are looking to replace a job, you may feel the need to purchase clothing for the job interviews. However, your financial partner may be concerned about using money that could go towards a mortgage payment. Express why you have the need and determine if there is another option to fulfill the need. Maybe you could purchase clothing from a secondhand store or a discount retailer. You will feel more confident during the interview and spend less money. Next, if you have a financial partner, you will want to determine who will take responsibility for specific steps. Communicate together with which items each will do and the timeline for when they will be done. If you are doing this on your own, try to find a good friend or extended family member who will be there to talk with. Give them permission to check in on you. This will keep you on track and hold you accountable for your timeline. If you have many financial obligations you are concerned about maintaining, you will want to review your emergency budget to determine how much money you have to put towards debt. Although it can be very daunting to decide on a plan for debt, it is important to consider your options and communicate your needs to your creditors. As we discussed earlier, you may want to seek professional help and contact our partners at GreenPath Financial Wellness. Speaking of communication, communicating with your creditors as soon as you may not be able to make a payment is imperative. You have many options, but creditors, we can't extend help if we don't know what's going on. So talking to us is the first step. One of the options you may consider is hardship programs. This is where you will contact your creditors, such as credit card companies, to tell them about your situation. They may be willing to help you through with an internal program that they offer. You may be able to get a lower payment, an interest rate, or late fees waived. Some lenders may change your due date. Some may even offer you a skip a pay option, so we do that. I think, let's see, you're allowed 2 per year. If you anticipate your hardship being short term and would be able to resume payments the next month, that is something that a lot of lenders will offer, is the skip a pay. If it's just, you're having an issue because something happened, maybe you had an accident, medical accident. Before making the call, be sure you can explain why you are asking for assistance and have an idea of how long the hardship might last. Also, let the creditor know what you need to get through the hardship. If you know what your budget can support for a payment, ask if they can make the accommodation. Be sure to take good notes. including when you called, who you spoke with, and the details. If possible, see if they will send you the details in writing. And finally, ask if it will impact your credit score and if they will close the account, especially credit cards, because most of the time, if they do extend any help, they will have to close the account. So definitely ask those questions. Looks like I'm going to run out of time because of the issue I had with the time with my volume. So I will speed through some of this. Okay, another option to consider is asking for a forbearance. Typically, this may be an option for a mortgage or a student loan, but it could apply to any type of loan. Essentially, a forbearance is a temporary postponement of loan payments. Some forbearance plans could allow you not to pay any payment. Other times you may need to pay the interest, or the taxes and insurance may need to be maintained, for example, like for a mortgage. You will need to negotiate this with the lender. And just like hardship programs, be sure you can discuss the need, how long it will last, and exactly what you are asking for. Once again, be sure to keep detailed records. A third option is a loan modification. This is when a lender changes the terms of an existing loan. It may consist of a change in the interest rate, or extending the term of loan repayment, or creating a new loan. Typically, loan modifications are used for mortgages. However, any type of loan could offer a modification. A modification is different from a forbearance. A forbearance is a short-term relief, and a modification is a long-term relief. Be sure you obtain any modified loan terms in writing, and ensure you completely understand the terms of the modification and what the changes you are agreeing to mean for you long term. The final option we will discuss today is a debt management plan. Non-profit credit counseling agencies offer this service to assist you in negotiating new repayment terms with your creditors, similar to requesting hardship programs on your own. This option is used for unsecured debt like credit cards and unsecured loans. You won't be getting a new loan, but the agency will work with the creditors to request late fees to stop, lowered monthly payments, and reduced interest rates. You will deposit money into your account with the agency, and they will manage the disbursement of the payments to each creditor. Once the plan is approved by your creditors, your monthly credit card statement will reflect the new arrangements, and you will see your payments be applied and your balance going down. Communicating with the agency you are working with is important to understand any credit impact. Typically, the creditors will close the accounts when they agree to an offer of new repayment terms. If you have any specific needs, they may be able to work with you. If you want to investigate this option further, again, we have a nonprofit partner that has been in business for 60 years. They're called Green Path Financial Wellness, and they can assist you with understanding how this would work for you. I will include them at the end with their phone number. So on a final note, it is important to understand that debt management plans are very different from debt settlement or debt relief. Those are the ads that you see all the time, the ones you hear on the radio, the ones you see online or TV. When a company offers a debt settlement, they negotiate on the balance, not the terms. You will likely see a negative impact on your credit with a settlement. which may cause additional stress as you navigate the transition. I've also seen, even though they negotiate you paying the company lower, once you add in the fee to them, you end up paying more sometimes. So debt management is more, I guess, tangible because you can see where the money's going. You know exactly everything up front. Okay, so again, you'll likely see with a debt settlement company a negative impact on your credit. Be sure to ask questions about credit impact and credit communication with them before you sign anything. They also collect your money and they don't pay the debt until they have enough money to negotiate with. So then you could potentially have 6 months or 12 months of non-payment, and that will be reported to your credit report. So there's a lot to look into when you are considering one of these options. As we have said throughout our time together, you don't have to go through this alone. So life transitions that impact our finances are typically very stressful and challenging for many reasons. So take advantage of any help from your family, your friends, professionals you already have, and your community. Also, there may be resources available to give you that extra boost you need until you are back on your feet. If you are out of work due to no fault of your own, apply for unemployment benefits. There are benefits provided. These are benefits provided for temporary financial assistance for unemployed workers. If you become disabled, contact your employer to discuss any disability benefits you have through them. If you have a private policy, contact the provider to start that process of applying for benefits. If you are permanently disabled, talk to an attorney about applying for Social Security disability benefits. Health insurance is extremely important to have to avoid additional costs while navigating a transition. If you have lost employer-paid health insurance and need to replace it, you have a few options. One is to continuing your existing coverage, which is through COBRA. Per the U.S. Department of Labor, COBRA gives workers and their families who lose their health benefits the right to choose to continue group health benefits provided by their group health plan for a limited period of time under certain circumstances, such as voluntary or involuntary loss, reduction in the hours worked, transition between jobs, death, divorce, and other life events. Keep in mind that you will be paying the cost out of pocket. COBRA generally requires that group health plans sponsored by employers with 20 or more employees in the prior year offer the opportunity. You will need to determine if your budget can support this option. Another option is to apply for medical coverage through healthcare.gov. You may qualify for lower costs depending on your expected household income for the year. Medicaid provides free and low-cost medical benefits to eligible adults with low income, children, people who are pregnant, people aged 65 or older, people with disabilities. You will apply with the state you live in, and each state has its own requirements. Another great resource is 211. 211 is a free service that provides individuals with confidential, comprehensive sources of information about local resources and services across the country. They can provide information on housing, utilities, food, healthcare assistance, and much more. And if you want to go to their website, it's 211.org. If you are in a financial transition, don't forget to talk with your financial institution. They may be able to offer hardship assistance with the debt you owe them, or look at loan products that other resources that they offer to help you get through the transition. Finally, don't forget to consult with a financial counselor, a nonprofit agency. Our partner is GreenPath. They can provide you with free and confidential guidance. They can help you create a budget, discuss ways to track it. They can review mortgage and student loan options and discuss options for handling your debt. If you would like to take a closer look at your specific financial situation, you are welcome and encouraged to call them. And GreenPath, again, it's a nonprofit organization that we partner with. We provide to all of our members, and that consultation on helping you budget and getting prepared for a mortgage, that is included. They are certified counselors and can conduct the free confidential financial assessment with you. This involves taking a look at your budget and collaborating with you to develop an action plan to work towards your financial goals. If you would like to speak with them, I've included their 800 number on this slide, so please take a photo or write it down. We also have the website is listed on there for you. That also includes all kinds of learning information, those e-courses, videos, articles on just about anything you can imagine finance-wise. So it's a great resource. I use it all the time. I send links to members to help them, understand buying their first car or whatever it might be. And then I also wanted to invite you guys, if for some reason you are not a member yet of CDC FCU, then we would love for you to join. So the promo code I'm going to give out today is MM26. And that would be put in the promo code if you fill out the application online through our website. You will receive a match up to $25 for your first deposit. And our next webinar is Building Your Spending Plan. That's coming up on September 9th. And that will be at noon. And you can sign up by going to cdcfcu.com and clicking under resources, the financial tab, or financial workshops, and then you'll see I'll have the next 3 up in the next probably week or so. But I think that or I'll have the rest of the year up in the next week or so. So I know I don't have time for any questions, but if you want to pop some into the chat, feel free. I'll get to any questions that came in. I'll reply to them in the email, a follow-up email. And as always, if you do want to reach out to me, it's kallison@cdcfcu.com. And I really want to thank you guys for participating today and joining me. So have a great day. The way you will access the courses, you'll go to that website, mygreenpath.com /CDCFCU, and then you'll see all kinds of courses on there for you. Let me see if I can get the web, if some of you want to stay up, let me see if I can pull it up for you here. Oops. Give me just a second. Okay, so I am going to I lost something here. Let's see. Okay, I'm going to share again. If any of you guys are still on with me, let me share this. Okay. So here's the site, and you can, like, the learning lab, financial counseling, resources. There's so much stuff in here that it is phenomenal. I mean, you can take these courses to learn. Here's one online course about home buying. It's wonderful. Like mortgage refinance. What do you need to know? What questions do you need to ask? We've also got some in Spanish. Um, so yeah, lots of good stuff in there. Okay. Let me see. Did I have any other? Oh, thank you guys. It was wonderful. I appreciate it. All right. Well, if you do have any questions, feel free to reach out. And as always, let me know if you need anything. Have a good day.